Hey guys, Brandon here from Infinite Wealth Engine with a nice topic today: how health ratings affect your cash value growth. So you have picked a particular policy that you want to go with. You have picked an insurance company that you want to apply for. The next step is medical underwriting. Medical underwriting is important as the insurance company will deem you as insurable or uninsurable from their standpoint. Keep this principle in mind. The better health rating that you have results in a lower internal insurance expense, which results in higher cash value growth throughout the years. This means that you want to have the best health rating as possible so that you can see the best cash value growth throughout the decades. So what are the different health ratings that you can receive? So let's start from the top. The very first is called Ultra Preferred or Preferred Plus. This is the top tier health rating. The next one down is Select Prefer. The third is a non-smoker rating. The fourth is a standard smoker. And then we're going to get into the table ratings. What we want and where we want you to fall at is somewhere in the top three: Ultra Preferred, Select Preferred, or non-smoker. If your policy is structured for maximum cash allocation, you will still see great cash value growth even if you were to fall between these three categories. What we do not want, or what we want to stay clear of, is the table ratings. So remember we had mentioned before the table ratings? Those table ratings can be tacked on to, let's say, a non-smoker rating or a smoker rating. But as your table rating increases, this results in a drag on cash value growth. So with the table ratings, it goes table 1, 2, 3, 4, etc., or table A, B, C, D, etc. Every time that you get a new table rating, meaning you go higher up on the numerical or the alphabetical levels, they're going to be tacking on an additional 25% on your internal insurance expenses. So, for example, let's say you had $1 that you were to pay per year, and that's very cheap, of course, but we're just going to use that for round number's sake. $1, which is your internal insurance expenses every year. With the table rating, let's say table 1, they are going to tack on an additional 25%. So instead of you owing $1, you are now going to be owing $1.25. With a table B or a table 2 rating, they're going to tack on an additional 25%. So that means you would be owing $1.50, so on and so forth. This is a good way to think about it, even though it's not exactly, perfectly like that. You owe 25%. Just remember, if you were to have a table rating, this creates drag on cash value growth. If you are uninsurable or you have maybe been exposed to underwriting before and they have given you a non-favorable or an unfavorable rating, is all hope lost? No, of course not. You still have a lot of options to consider. You can send it through reinsurance. You can have an additional person to be the insured while you being the owner. These are good options to consider if you have a bad driving record that may result in a table rating, or your build may be on the heavier side, which the underwriters will give you a table rating also. Don't be scared. The best thing to do is to apply for the illustration and the policy that you want to go with, and then if you get an unfavorable rating, then there are options that we can consider. Talk about it with us today. Brandon here at Infinite Wealth Engine. Email me with any questions that you might have. Remember, stay healthy and stay wealthy, and we'll talk to you soon. Thank you so much for watching. If you like this video, make sure to like, subscribe, and comment below. If you would like more information, visit us on the web at infinitewealthengine.com or click on the link to receive your free PDF on how to build your own infinite wealth engine using the infinite banking concept. We look forward to talking with you soon. Brandon here saying stay healthy and stay wealthy.